Assalamu alaikum, everyone. I hope you are doing well. Today is Thursday, July 24th. And yesterday, after market close, we got the Tesla earnings. And investors were disappointed with what they saw. And the performance on the earnings call wasn't that great. Energy was low. Um, some of the comments that were made were not exactly what investors wanted to hear regarding timelines, regarding specifics or lack thereof. And today in this live, I'd like to go over exactly what happened and my view of Tesla in light of its most recent earnings. So, um, looking at the indices before we jump in, the Russell was down 1.38%, Dow Jones down 0.7%, S&P was up slightly, Nasdaq was up 0.25%. Crypto took a bit of a breather. Pudgy Penguins was down 10%. That's why we always take profits, folks. Doge is at 1.5%, Sol down, that is. Doge is down 1.5%, Sol down 1.3%. And Bitcoin was, let's call it flat. It's currently trading at 118,000. All right, let's talk Tesla and what I think. All right. So here were the main lowlights from the earnings report. So Tesla revenue in Q2, it slid 12% from a year ago. So compared to Q2 2024, down 12% to 22.5 billion. Now, if you'll recall, before this earnings, I told you guys that we already know the earnings are not going to be anything to write home about. We already know the deliveries. We know that the sales are down. We expected this. So nothing here that is out of the ordinary, I don't think. Now, free cash flow, a lot of people had things to say about it. Free cash flow was down 89% year over year to 146 million versus expected 750 million. Here's what's very important to understand about free cash flow. Free cash flow equals operating cash flow minus capital expenditures. So when free cash flow is down, either operating cash flow is down or capital expenditures are up, or a combination of both. And we're going to see that the reason that free cash flow is down as much as it is because the company is reinvesting aggressively. It has dramatically increased the amount of CapEx that it is spending, and we'll talk about that. So that's not necessarily a negative for me. I want to So the more a company spends on CapEx, the more it spends on R&D, and we'll talk about that as well, the more future potential the company has, assuming that the management is competent and it's using the R&D CapEx dollars spent wisely. And I think this is the case in Tesla. And another lowlight, I would say, is Tesla's new low-cost EV platform is moving slowly. And we did kind of get some color on that. Wherein the lower cost model for Tesla is expected to be basically a smaller Model Y, a smaller version of the Model Y. And it's doing this in order to take advantage of the infrastructure that it already has and get to production sooner rather than design a new model from the ground up. And the production process for that new model would need to be put in place, and that will take longer, take more additional investing. And to be honest, even though I was excited for a new model from Tesla, I don't necessarily fault them. I think the Model Y, especially especially the revamped Model Y that came out not too long ago, it's a beautiful car. And so smaller version of that is totally fine by me. Again, I was expecting a completely new model, but a smaller version of this revamped Model Y still looks pretty cool. And especially when you add to that potentially full self-driving capability, unsupervised full self-driving capability, I think the potential for this new model, the smaller car, to enhance sales in Europe, in China, other places that like smaller cars more than the United States, the potential is pretty high. All right, now let's talk about the highlights, and I thought there were many. So, first of all, Robotaxi, the plans are a pace to scale unsupervised Robotaxi experiment that's currently going on in Austin throughout the rest of the year. Elon Musk did mention this, and I don't know how accurate this is, but he mentioned something on the order of like, okay, half the population of the United States maybe having access to Robotaxi, some version of the Robotaxi service within the next 6 months to a year. That would be fantastic. Obviously, that would bode well for the stock. But even if we achieved, I think 20% of that, it would still be pretty darn good, and investors could extrapolate from that and say, okay, this is how long it's going to take to cover the entirety of the United States, extrapolate the cash flows, and so on. Megapack deployments grew 60% year over year in Q2. This is their energy storage business, and this is currently their most profitable business. Is growing at 60% year over year. That's not bad. Margins are very strong. Management says thousands of Optimus units could be deployed by year end. That's going to be huge for the company and for investors thinking about what could be. The AI, fleet learning, Dojo training supercomputer, all of these projects seem to be tracking well. If you look at Dojo 2, that's expected in 2026. And by the way, it's expected to reach a compute equivalent of 100,000 NVIDIA H100s. The AI 5 chip, that's targeted for 2025, 2026. And already they've started the AI 6, the next generation of their chip, and the Dojo 3. They're already in concept. So, and the FSD version 12, the most recent version for the full self-driving, the usage for that is rising. Take rates are rising. And by the way, half of Tesla owners don't use full self-driving. So there's a huge addressable market just among the Tesla owners already, let alone people who don't own Teslas yet. And Tesla has reported 10x lower accident rate compared to human driving. I think that's a very compelling selling point for Tesla vehicles. And by the way, a lot has been made about Tesla sales in Europe and other geographies in the world, and why aren't they competing with other companies, Chinese companies often. And a lot of these jurisdictions have not authorized the use of supervised full self-driving in their areas. And therefore, the car is being sold, I think, without its main selling point, which is the full self-driving. That's the main selling point. And so it's just competing then on price and size, aesthetics, and range. And Teslas tend to be of higher price than Chinese vehicles. And so once these jurisdictions start allowing full self-driving, and especially once unsupervised full self-driving starts to be available, then the dynamic is really going to change. And I think you're going to see an uptick in sales in a dramatic way. And I've said this before on this live, I'm not really concerned about sales almost at all for Tesla. What I care about is unsupervised full self-driving working and the authorizations that they need, because I think basically the regulatory approvals at this particular point are a bigger hurdle than the technology itself. I think the technology is basically there. I mean, it's working in Austin. But the regulatory approvals, that's really the bigger hurdle at this particular point. Once the robotaxis are available, then from Tesla's perspective, it basically could use every single car that it makes, regardless of how many it's able to sell, and simply add them to their Robotaxi fleet and see which geographies require more cars, add them there, and it can keep all of the revenue from those cars to itself. So that's why I'm not really hung up about their sales, even though I do think that sales will recover and um, and will rebound in a very strong way. Um, and it's really important to realize that Tesla has essentially transitioned from an EV maker to a full stack, real world AI platform from end to end, from raw material all the way to the robot and everything in between. Tesla now controls its own destiny, controls its own technology, controls its own um, products, everything uh, that you need for a real world AI. Tesla has its own version of it, and it's basically leading in this space, which I believe will transform the world perhaps more than any other space in the next few years. So this is very important to understand. No other company has the type of end-to-end vertical integration that Tesla has. Um, and to be more specific, they have their own chips. They're designing their own chips, and eventually, believe that they will wane off of the NVIDIA chips, and they're use exclusively Tesla chips. And eventually, I do believe that they will start selling those chips to companies, and they may end up being one of the main competitors for NVIDIA. They're using those chips to train massive neural networks on real world data from their fleet. Right now, there's 4 million Tesla cars gathering data every single day. No other company has this type of bank of data. And then deploying that intelligence that it uses from processing this data, deploying that back into the vehicles, into the robots, which accumulate more data, which they use to train and learn more and improve, and so on. The virtuous cycle continues. No other company controls its own destiny like Tesla does in this regard. Now, let's look at the income statement and look at the some of the particulars. What stood out to me, if you look at research and development in Q2 of 2024. That's right here. And a lot was made about, missing expectations, what's going on with margins. Well, in Q2 2024, R&D was around $1 billion. In Q2 2025, it was around $1.6 billion. So this is an investment in itself. And the more a competent management invests in R&D, invests in CapEx, the more the spring is coiled for the stock, and the more future potential it has once it is released. So I don't look at R&D as a loss at all. I look at it as a positive. If you have a long-term mindset, then you look at it in the same way. If you want, if you have calls and you want the stock to go up in the near term, well, then you don't care about research and development. You care about what is the headline, and um, and that's not where we are. So that's important to understand. And another thing that stands out to me is cash and cash equivalents. That's this number right here. So in Q2 of 2024, that was at around 30 billion. Now it's at 36 billion, 36.7 billion. So the company is producing cash despite all of its investments. despite all of its CapEx investments. The company is producing cash, and the total assets are growing faster than the total liabilities, as is evidenced by the stockholder equity. We went from 66 billion in Q2 of 2024 to 77 billion in Q2 of 2025, which is up from last quarter, which was at 74 billion. So progress is being made here. It's not like the company's losing money. It's not like the company's burning cash. It's not like the company, despite this aggressive reinvesting in itself, it's not like the company is struggling. They still have a pristine balance sheet. Their debt is basically a non-factor for them. They have a pile of cash that they can use, now close to 37 billion. And they mentioned in their update to investors that they have enough cash for their future plans. So we shouldn't expect any major dilution. In fact, actually, I don't want this to happen. I'd rather they reinvest in R&D and CapEx. But I would not be surprised if in the next few years, once this Robotaxi thing starts producing the avalanche of cash that I expected to produce, for the company to start buying back shares. I think that would make a ton of sense. But not now. I think right now, more R&D, more CapEx. Let's get the production capacity growing as fast as possible. I'm fine with that, even if I have to wait another quarter or two or three for the stock to pop. Now, cash from operating activities is still strongly positive, and this is what I wanted to point out with regards to free cash flow, because essentially free cash flow, as I mentioned, is cash from operating activities minus the capital expenditures that the company is making. And so if you look at the net cash flow provided by operating activities, that's 2.5 billion. So the operations are providing cash. It's not like the free cash flow. It's not like the operations provided, 150 million in cash, whereas it was expected 700 million. Which some people may look at free cash flow and think that that's what that means. No, the cash from operations were 2.5 billion. The company invested in capital expenditures 2.4 billion in capital expenditures. So more plants, increasing capacity, increasing production lines, investing in itself, buying new machinery. All of that is where the cash went. And so I'm fine with that. So what if free cash flow wasn't 700 million? The company is sitting on close to 37 billion in cash. Why do I care if it's 700 or 100 million in free cash flow? So long as that money was used to grow the potential for the company, I'm fine with that. So here are my takeaways. The rollout for the Robotaxi is potentially exponential, right? The bottleneck here isn't the technology. The bottleneck is the approvals, the regulatory approvals. The quicker it can get regulatory approvals, the quicker this thing rolls out. Remember, you don't need geofenced areas to roll this out. You just need regulatory approval and vision, which the cars have. Every Tesla from hardware 4, which rolled out in 2023, has the vision. And everything that is coming off of their production lines has this vision that would allow them to become autonomous. So the rollout of Robotaxi could potentially be exponential, aggressively exponential, I'd say. Smaller Model Y, it's not what I was hoping for, not as cool as a completely new model, but the Model Y looks pretty darn cool as it is. A smaller Model Y makes sense to me. It would make it more appealing for people in Europe, other places in the world that are more accustomed to smaller cars. Unlike us in the United States, we have huge cars. huge waistlines, huge everything here in the United States compared to the rest of the world. Lower rates, which are expected um, later this year, lower rates should help sales in auto, in energy, everywhere. It should help this company a lot. Now, the strong changes in the financial picture may take until the second half of 2026, when you start to see really the needle moving for the financials in terms of Robotaxi and maybe even Optimus. And who knows, maybe Dojo, other companies may contract Tesla to use it to do their training for them. Who knows? But I suspect, primarily for Robotaxi, for this to hit the financials in a big way, maybe we take till second half of 2026. This is not to say that the stock will wait until that point. It's possible that if the rollout happens aggressively, and hey, maybe we're reaching half the population of the United States, or it's, we see a path to do that within the next few months, as Elon Musk was stating, then investors are going to price that in before it hits the financials. They'll do their own calculations before the formal ones come out. No other real-world AI company has end-to-end integration. Now, I currently, my position is basically, I'm viewing Tesla as cash, basically. If I get profits from somewhere else, I'm going to put it in cash. If I take profits, I'm going to put it in cash, assuming there isn't another opportunity that interests me. Put it in cash. That means for me, it's in Tesla. Eventually, this thing is going to pop. I don't know when, but in the meantime, I'm just going to consider it to be cash. When it dips, I'll probably buy more. But I'm sabur. I'm patient. However long it takes, it takes. But my conviction level in the path that this company is on is very strong. And yes, things take longer than expected. That's for sure. But no other company is trying to do what this company is trying to do. It is revolutionizing the way we travel, and it's going to revolutionize the labor force. Optimus may end up being the biggest product of all time. So, with that being said, the matter requires patience. I don't know what's going to happen. I didn't sell a single share after the earnings. If anything, I was, considering buying, but there are other opportunities that I think in the nearer term are more compelling. So I'm focused on those. But the time for Tesla will come. And in the meantime, I'm considering it better than cash. Let's say a money market account, halal money market account. It's going to give me a return. Maybe it's a modest return, but that's fine. Eventually, it's going to hit its stride. If you want to follow our portfolios, make sure to join PIF. Maybe you can become like Sheikh Pandi, who joined the ranks of millionaires on the backs of one of our picks. Congratulations again to Sheikh Pandi. Thank you for sharing your experience. And hey, all was not bad for Tesla today. Donald J. Trump, to make sure you don't confuse him with Donald E. Trump or Donald F. Trump. Donald J. Trump mentioned that, he's not really against Elon or Tesla, and he's not trying to do anything harmful to that company. He wants them all to succeed because he's a patriot and Tesla is an American company. Well, at least this is what this tweet suggests. So with that piece of good news, we'll go to questions, inshallah. Harun, we got hit in the kidney from Tesla. Alhamdulillah. We are we're up for the challenge, inshallah. Salamat, Dr. Khalid. Nice to see you. All right, low lights. Muhammad says, Assalamu alaikum, Rakan. Wouldn't it be better if we rotate to something else rather than sitting on this? Perhaps, but I just don't. I don't want to take that risk. Well, I've waited for as long as I have. I think we're in the event horizon for this stock. That is, we are on the paths that they've taken, whether it's Robotaxi or Optimus or even Dojo, their AI chips, energy, the path that they're taking have enough momentum, I think, to take them to really the next level. And so you're welcome to do whatever you want. As I said, if I'm investing new money, I'm probably going to put it in other names because it may take a while, but it may not take a while. It may surprise everyone. Maybe if they, as they were mentioning, expand to the Bay Area, within the next few weeks, and all of a sudden expand to 3 or 4 other major cities, investors may take a second hard look at this company. So I'm not going to be rotating. I haven't sold a single share of Tesla. I may buy more if it continues to dip. I was pretty surprised that it stayed above 300, to be honest. I thought it was going to go down more, but staying above 300 is pretty encouraging. Who knows what happens tomorrow? But eventually this will pay off, and I think we'll forget about the wait time. When would you consider doing a swing trade with Tesla? I think I answered that. Think about this when it hit a new all-time high earlier in the year. Yeah, I mean, hindsight is 2020. Obviously, we didn't know what was going to happen. I think definitely tariffs affected margins, which was part of the picture that investors didn't like. But hindsight is 2020. I wouldn't beat myself up too much about that. I think that in the first half we were expecting the lower cost model that didn't come. All of these things, it's not like they're not coming. We're seeing progress. The unsupervised full self-driving is working in Austin. It just things are not going as fast as some people may hope. But we're definitely making progress in the right direction. And then I think it's, especially as it relates to Robotaxi, it's going to be slow, and then all of a sudden. And so I think that investors may be caught by surprise. I don't want to be one of them. Young SF or Young ESF or Young YSF? I don't know. Young Yusuf, I'm going to assume. Assalamu alaikum. I'm a new member. Congrats on becoming a new member. Would you recommend waiting a bit more for Tesla to fall before buying or going for it now? Now, I would say dollar cost average. And I would also say make sure you're looking at our upside conviction score and look at the the names that are in their buy zone and start, with the first name and moving down that list. So building the dividend portfolio, I would start with the companies that are in their buy zone, and then once other companies become in their buy zone, try dollar cost averaging into them as well. Assalamu alaikum, Rakan. Well, we have actually a number of earnings reports coming next month, which I think, inshallah, will be good for a lot of our companies. Malik says, Assalamu alaikum. Enphase has gotten beaten up recently. You think it's time for it? I'll take another look. Last time I looked at it, it was still not time, but maybe I'll take another look. Ali Imam says, Sam, I'm not worried about free cash flow due to heavy CapEx, but how do you justify a PE of 130 for a company with double-digit decrease in revenue? I understand your question. It's a legitimate question. But again here, and I've done the math on it for robotaxis. I think with a conservative multiple, and I've done the math on this live before, with a conservative multiple, a Robotaxi on their own could add, 2 to 3 trillion to valuation. So the PE, especially for a company that is, I think, on an S curve, the PE, since it's considering, last year's earnings, is not really a good valuation metric. You need to look ahead at the free cash flows that you're expecting in the future, especially with regards to Tesla. As I mentioned, this is a company that is going from an EV company with tough margins to, I believe, a real world AI company that's going to have much more generous margins. And so the valuation and the multiples are going to change dramatically. I think really from this earnings, if you're a bear, you stayed a bear. If you're a bull, you stayed a bull. Nothing really has changed. We knew deliveries wouldn't be great, but there's a big difference between flat revenue and a 10% decline. Well, keep in mind, Ali, there's a lot of things that are in play here. So the price of the car has gone down, so the average selling price has gone down, and the interest rates haven't gotten any better. We were, and we're at a point where we believe that interest rates are going to come down, and in a lot of places, especially places like Europe, they haven't allowed Tesla owners to use supervised full self driving. So basically, it's like Tesla is fighting competition with one hand tied behind its back. If users aren't allowed to use unsupervised full self driving, well, then the value of the car is not the same. And so I think all of these things that I mentioned are eventually going to solve themselves. And when that happens, I think sales will recover, revenue will recover. And as I mentioned, with regards to sales in particular, it's not really that concerning for me because so long as Robotaxi works, they'll be able to use every single Tesla they can make. Malik says, how long have you been buying, holding Tesla? Since 2018 was the first time I bought. Robotaxis had cameras on their roof. Isn't that a big concern, given that their advantage over Waymo is that they don't need to map the area? So that's how they started, but not all of them had cameras on their roof. They did start with like a geofenced area and not typical, but that's how they started. And currently, there are robotaxis operating in Austin without additional cameras, just with the hardware of the car. And I believe that this is going to expand to other geographies. Brother, regarding other names on the watch list, I add them for people to add diversification if they'd like to. And so all of them are companies that we've vetted very closely, and we expect them to do well. So, alhamdulillah, ASPI doing well is proof of that. What do you think about United Healthcare? I don't like United Healthcare. I don't like their product. I don't like their company. And so I don't really care about the valuation at this point. Does ASML Holdings have anything to do with Israel? Not to my knowledge, and not in a material way that would cause discomfort. Supermax says, Salam, thinking the best way to buy Tesla's wait patiently to break out and consolidate above 360. Till that time, invest in BTC and enjoy the upside momentum. That's totally reasonable. Certainly, BTC seems to have a lot more momentum than Tesla does, especially on a day like today. I tend to invest in a contrarian manner, investing in things that I believe in, have high conviction in, but people are down on because I think that's you get the best prices. And assuming, of course, that I don't mind waiting. Now, with regards to Tesla, as I mentioned, I am holding right now. I haven't bought or sold any shares since the earnings, as PIF members know. And therefore, that's my plan for right now. If we get a further dip, I will definitely be adding. By the way, I agree with you on Tesla. In my opinion, I think it's going to be the biggest company in the world. I appreciate you. Thank you, Gix. I appreciate you as well. And I agree that it definitely has the potential to become the biggest company in the world. If you look into the future, what's the most prevalent industry going to be? Probably real world AI. Who has absolute domination in that field? I think Tesla. For ASML holdings, check out our buy below, sell above prices. And by the way, congrats on people who are holding comfort systems. That beast continues to deliver. So, alhamdulillah. With that being said, love you all. Thank you for tuning in. Leave a like if you enjoyed this live. And until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.